Okay guys, my name is Isaac and today I'll be showing us our strategy, the strategy I use to trade. So first thing is you open your charts, you put in your moving average. This red one is moving average 20, then this yellow one is moving average. This red one is moving average 200s. Then this yellow one is SME 20. Let me just call them SME. It means simple moving average. So the red is SME 200, the yellow is SME 20. Now, if you want to know the direction of the market, when price is above SME 200, it's an uptrend. When price is below SME 200, it's a downtrend. So above 200 is uptrend, below 200 is downtrend. Now, that is number one confluence you look out for. Second confluence you look out for is both of them must be close to each other. Both of them must be close to each other if you want to enter the trade. Now you can see that from here to here, from here to here, I don't know if you can see. Okay, all right, from here to here is far from each other. From here to here is close to each other. Okay, from here to here is far from each other. From here to here is close to each other. So we only trade when price is close to each other. Now, if you want to buy, for example, and the market is doing, let's start from here. The market is doing this. Remember, I said only buy when the price is close to each other. Now, what are we going to do is, you see this red candle here. This red candle here is very close to moving average 20. Very, very close. Like the market has closed here. The market has closed here. Then there is a big blue. Now, every time, if you want to buy, remember, the price has to be above moving average 200, SME 200, and they have to be close to each other. Remember, so if price is above moving average 200 and they are close to each other, then you see a red candle here that closes around moving average 20. Then the next one happens to take out the previous red, just like this one. You see that this one took out the previous red at this point. Immediately it takes out the previous red, you are supposed to enter the market with all your chest. You're supposed to enter the market, but we cannot enter this market. Why? Because the 200 is far. See how far? They are far from each other. But let's go and check for another entry. So if you see here, it went up, but it was not much. We are not supposed to be risking all this kind one. Let's go and look for another one. Now at this point, you will see that they are close to each other. They are close to each other here. Then what happened? There is a red here. There is a red here. This red here. Now you see that these two moving average are close to each other. Then price is above moving average 20. Then you see this red here. is being taken out by a blue. So you're supposed to enter here. You're supposed to enter here and set your stop loss below the previous red. And set your stop loss below the previous red. But what happened here is price did all of this. But you're supposed, on a norm, you're supposed to be entering immediately. Price takes out the previous red. So price took out the previous red here. You are supposed to enter. Then there's another red here, but price didn't take it out. No price took it out. Then there's another red, then green, then another doji red. So we are waiting for price to take out the doji red. The next one didn't take it out, but the third one took it out. So we are supposed to be entering. It doesn't matter if it is the next one or the third one or the whatever one. So we are supposed to be entering this market again. Then red came. Then nothing. The red, no green took out red. No green took out red until here. Until here or here. This is an obvious one. Did you see that immediately price took out this red? What happened? To the upside. So you see, as price took out this red, what happened here is they are not far from each other. The two moving average are not far from each other. Price is above bullish. Price is above SME 200. Then red formed around SME 20. Then blue take it out. We enter the market. Then we would have entered this market too, this one here, because blue took it out, but we are not supposed to enter it. Why? Is because these two moving average are far from each other. They are far from each other. And when are you supposed to leave this trade that you entered here? Is when price is far away from SME 20. You're supposed to leave the market. So as at when price was here, SME 20 was here. So it was far. It was far from each other. You're supposed to leave the market because it is far from each other and look for another entry. We cannot enter this one because these two moving average are far from each other. So three things are supposed to be around each other, like this. Three things are supposed to be each other like this, close to each other, which is the price, moving average 20, moving average 200, close to each other like this. Then when they are far from each other, you leave the market. I don't know if you are getting it. When they are close to each other like this, you will look for your entry. When they are far from each other like this, you leave the market. Now see, they are far from each other. See, one is far from this one, then this one is far from this one. So they are separated. Then see this one. This one is close to this one. This one is close to this one. You are supposed to look out for entries here. Do you get? So at this point, you are supposed to leave the market. Then wait for them to come back. They are actually elastic. So if they expand and draw further from each other, they will still come back. All right, let's keep going. So you can see that at this point, red didn't actually take green out. But let's come to the point where they are all together. They are all together, not far from each other. Well, I wouldn't have. Here is consolidating. This is not too far from each other. You can see that this is not far from this one. This one is not far from this one. This is not far from this. This is not far from this. So immediately the blue takes out this previous red. I'm entering this market. Immediately takes out the previous red. I'm entering this market. But what happened here? This one now is far from this one. This one is far from this one, because at this point, this moving average will be here. Remember, all this one has not been formed yet. So when price is here, this moving average will be here. So they are far from each other. Now there is another good entry here, but I won't take this because these two are far from each other. These two are far from each other. I don't know. I actually wanted to use my screen recorder, but I couldn't use it. So this is what trade is this? Let's just go and use Nasdaq and see how it works on Nasdaq. Okay, let's go back. Let's go further. Let's go further. Okay, one more. All right. Now, okay. Nasdaq is disappointing me. But anyways, if you look very closely, this is far from each other. I would not enter this trade. But if you look closely, you see that it played out here. There is red here, close to the moving average 20. Then what happened? Boom. Immediately it takes out the red. Price surged to the upside. Okay, let's go back to let's keep coming to the present. Let's keep coming to the present. Okay, see this one too. The same thing happened here. The same thing happened here too. But remember, moving average 220 is still below 200. Is below 200. But watch what happened here. You see this candlestick that takes out the previous red, closed above moving average 200. It closed above moving average 200 slightly. Okay, let's see. Well, guys, this is I think 11 o'clock or so. Okay, this is actually not too far from each other. Not too far from each other. But what happened when this red formed around moving average 20? What happened? To the upside. To the upside. I want to see a setup for sell. I want to see a setup for sell. I wouldn't take this because as at when this one is forming, this candlestick is this moving average is above moving average 200. So I will miss all of this. But what happened here? You can see here that there is a blue candlestick, then there is a red, and these two moving averages are close to each other. Immediately red takes out, it can be the next red, it can be the one before the next. Immediately red takes out the previous blue or green, if you, I don't know the color of your candlestick, takes out the color of blue or green, you are supposed to enter to sell. You are supposed to enter to sell. And what happened here? To the downside. Now at this point, you see that price is far from this moving average 20. Price is very far from moving average 20. Then know when to leave your markets. Know when to leave your markets. I want to see another entry. Okay, another thing again I want us to understand is when price drops like this, you can set your stop loss. You can I want to at 50%. I don't get it. You can set your stop loss at 50%. 50% of this. Just cut this into two. Cut this into two. Remember, your stop loss is supposed to be here. Cut this into two. Then bring your stop loss to this side. What price will do is when it goes down, it will come to 50% or close to 50% and drop again. So what happened here? If you don't leave this market, it did this and dropped again. Then what will you do is you come to this one and set it to 50%. Just the middle. And set it to 50%, just in the middle. Then what happened here? It touched here and dropped again. What will you do here? You still set it to 50% of this. Then price dropped and went up back. So, but let's keep looking for entries. First, let's just keep looking for entries. If these three things, if it is far away from each other, please do not enter. As I said before, if price, this is price, which is candlestick, moving average 20, moving average 200, when they are close to each other like this, you enter to buy, or you enter when they are far away from each other. You exit the market. So enter the market, exit the market, enter the market, exit the market. So they are. Let me delete this thing first. Okay. So you see 1, 2, 3. 1, 2, 3. So there are 3 things you are seeing here, which is 1, 2, 3. Close, you enter. Far away, you exit. So at this point, we didn't see an entry. So price is already going up. Then see here. You see that they have married each other safe. Price has married together with the two moving averages. Moving average 20 is above, price is above. Then you see this red. Immediately green takes out this red. You are supposed to enter the market. But what happened? It took it out here. This is where you are supposed to enter the market. You don't even have to wait for the candle to finish. enter the market here and to the upside. Then when are you supposed to exit the markets? When they are far away from each other. This is far from this. This is far from this. You are not supposed to catch every step of the market. You're not supposed to catch everything. You're not supposed to catch everything. What usually causes this abrupt movement is news. It's news. So now this thing has come down to sell downtrend. So we are looking for an opportunity to sell. So at this point, you're looking for red to take out blue or green. I don't know what color is your own candlestick, but with this color I'm using is green. But I didn't see any entry here for red to take out green. I see one here. I see one here. This red took out this green. So I will enter this market here. Even if I enter here, what happened? It drops to the downside. If I enter this one, when this one took out this green, previous green, if I enter there, it still dropped to the downside. Why will I enter here is because they are close to each other. You can see that three pattern close to each other. This one is close to this yellow. The yellow is close to this red. So let's look for more entries. I think that is all of the entry. But for my gold, I have a special analysis I use for my gold. So let gold load. Let gold load. So this is gold. This is gold. How do I trade my gold? I wait for a minimum of 3 strong bullish or bearish candle before I enter. It's simple. Let's see here. There is a strong movement here. 1, 2. But 2 is not enough. Minimum of 3 is what I use. 1, 2. I always look out for a minimum of 3 consecutive strong candles. See here. What happened here? 1, 2, 3, 4. Crazy. This is an order block, a very legit order block. What do I do here is I just map out this zone. So when I spot this, you see the red one, this red one, before this 3 strong move, I will mark it out. So I'll just mark it out and draw it to the future. I'll mark it out and draw it to the future. I'll mark it out and draw it to the future. Then, so if you see, this one is the 3 strong move. 3 strong move to the upside. Then you see this red one before this 3 strong move is what I will map out to the future. Then what happened in the future? Price went like this, came back and dropped rapidly. Then see at my zone, at my very zone. Did you get it? At my very zone, it's skyrocketed back at my very zone. For this one, I don't use all this moving average. I don't use it. So this is one entry we've seen, 3 strong zone, then boom. So let's see, it will still work for support and resistance anyways. So let's look for another 3 strong zone. I have seen one. Oops. Oh. Okay, I have seen another one. Let me bring this one to this point. So there is one here. But remember, I am not supposed to be selling at all at this point. Why? Because it is uptrend. Don't forget our price is above this one. So this is an uptrend. So what happened here? If you see, when price got here, it reacted. It reacted. So when price got here, it reacted. It came down. Then when it gets here again, it came down. Before it broke, all these things are market maker. It's fake outs, fake breakouts. So at all these points, it is just market makers that are trying to play with our minds. Market makers are trying to play with our minds. Then what happened here? It retested it here. Did you see that it retested it here? So let's look for another entry. I'm seeing one again. I'm seeing this one. This one is not 3 strong. This one is 1. Then these 2 are weak. They are not strong. Then I saw this one. But if we even want to trade it like that, remember, we don't predict anything here. We trade accurately. We trade accurately. Oops. So let's say we want to trade this one. This one. What happened here? The price broke it, then rejected it here, came down, rejected it here, rejected it here, before it broke it. But if we look back to the past, we will find unlimited good entries. Okay. Okay, I think I saw one now. I think I have seen another one. Where is that one? Okay, here. There is a strong movement here. A strong movement here. But what happened? When price got here, it tested it. It dropped. Came back to test it. Drop before it breaks it. Okay. If you are a scalper, this should work for you. If you scalp, this should work for you. So we are looking for strong move. Strong move. This is strong. But let's see. Price didn't get there. This is strong actually, but price didn't get there here. Okay, let's try this strong. This is strong. If we look back, price will retest here in the future. This is also strong. Price will also retest here in the future. Whew. This is also strong. I don't know if I've counted this one. This is also strong. Oh, man, I'm fucking tired. Okay, there's another obvious one here. There is a fast move to the downside here. Abrupt movement to the downside. But if you check, you see price coming to retest it here. As I said before, a minimum of 3. A minimum of 3. So if we do this, okay, price actually rejected, like broke. This is a fake breakout. This is a fake breakout. Okay. Oh man, I think I'm getting tired already. Okay, just look for a fast move to the downside and enter. Let me just call this one my last one. Let me just call this my last one. Shapes. Okay, there is a move here. There is a fast move here. 1, 2, 3. Then what happened here? Price came back to retest it here. Price came back to retest it here and drop. So guys, this is the only strategy I believe that works very well for gold. But in my other pairs, I use the moving average, the 3 hands strategy. So guys, I think we will be able to understand all of this. I can't, I don't know if I actually videoed or recorded it well, but I believe if you watch and you watch over and over again, you should be able to understand it better. And feel free to ask me questions. Good evening, guys. Enjoy the rest of your day.